Evening everyone. Had a few weeks off the channel, but really glad to be back on and building again. Probably the only video I'm going to make over the next couple of weeks as I take a little bit of time off over the summer. But I'm out on a beautiful evening with the dog, and it felt really important to make this video and just talk about it from my perspective. And that was with respect to a lot of the stuff that you're seeing in the media at the moment around wealth taxes, and in particular for those of you that are following the Scottish news, the revelation that actually the higher rates of tax that the Scottish Government are currently levying on the very highest earners has actually yielded a net loss of around £22 million. And I wanted to just perhaps offer a take on that and explain to people why that might be happening, because on the face of it, you would expect that not to be the case, right? When you increase taxes, particularly around income, especially because the vast majority of people in the country are on what we call the pay-as-you-earn system, you would expect them to therefore pay more tax. However, that hasn't been the case, and let's just unpack that a little bit as to why. So first of all, for those people that don't know, the Scottish Government and the Scottish tax system, because it's a devolved thing, it's not controlled by Westminster, it's controlled by the Scottish Government, and they, through the Scotland Act and lots of other legislation, have the ability to vary income tax. So what that means is, and let's not unpack the intricacies of each tax bracket now, but let's talk about the general principle. If you're a lower earner in Scotland, and a wet finger in the air, and a very wet finger in the air says around £30,000 a year or less would probably be constituted as a lower earner, you're probably going to be considerably, again within reason, better off than someone of a comparable income in England, because the income tax system is structured in such a way that you would pay less tax than someone living south of the border. Makes sense. If, however, you are a middle or higher earner, and again, let me put you a wet finger in the air, someone that earns about £50,000 a year or more, you are going to pay quite a bit more than someone that earns the same amount of money in England. As a very rough comparison, if you earn around £60,000, £62,000 in Scotland, you'll pay about £2,500 a year more in income tax than someone earning the exact same salary in England. And again, let's not get bogged down in things like pension deductions and salary sacrifice schemes. Let's just talk about base salary. About £2,500 for £62,000 a year. And clearly that's scaled up the more you earn. So the more you earn, the more you pay, and therefore the less you take home compared to somebody that lives in England. Now, you could argue that there are very good reasons behind that. So for anyone, again, that doesn't know, there are a lot of things that are more universally available in Scotland than there are in England. Dentistry is free, for example, for all under 25s at point of use. Young people, it's a lot easier for them to get around. Free travel, again, free at point of use travel. Prescriptions for everyone, you don't have to pay for those. In Scotland, they are free at point of service, but they have to be paid for, and a lot of it is paid through the taxation system, clearly. The issue, however, because of what I can only describe as political decisions, the Scottish Government has increased the rate of income tax that it charges people to a point where, at the very highest levels of taxpayers, which is around about 48% tax rate for people that earn over £125,000 a year, roughly, we are now collecting £22 million a year less than what we were at before we introduced that tax rate. Interestingly, most people would argue with you that the actual number is even more than that. And the reason it's even more than that is because the only number we've looked at is the 48%. We've disregarded the whole sliding scale that happens all the way up to the £125,000 a year. So the reality is, and again, these numbers are really quite hard to crunch, but the reality is it's probably significantly more than £22 million, because that's just income tax. Let's not forget about things like stamp duty, VAT, and all the other stuff that people put into the economy through their day-to-day spending. But you think, well, why has that happened? And I think that's the bit that is perhaps flummoxing a number of people. And guys, this is, for me, a real classic example of where human behaviour interacts with economics. So what do I mean by that? If you're a business, and let's just imagine for the moment that the government is a business. You sell products or services, and you figure out that actually you're not making enough money, that the outgoings versus income, it just doesn't balance. You have a few things that you can do to make that stack more favourably from a mathematical perspective, right? The first thing you can do is cut your costs. The second thing you can do is sell more of the product. And the third thing you can do, and I'm speaking in very simple terms, but go with me, is you can charge more for what you do sell. And to a point, that works, especially if you're selling luxury brands. Rolex is a really good example of a Ferrari, and another one, real high quality brands that people are prepared to pay a lot of money for. However, if you're not delivering absolute quality, you can't afford to be exclusive on price, because there will come a point where your customers turn around and say, well, thanks very much, mate, but I'm going to go and shop elsewhere. And you could argue that when you look at the Scotland economic question, what we're seeing is exactly that. People that earn more money are, generally speaking, more economically mobile. They might live in South Scotland and quite simply just relocate to Northern England. That's one really easy way of saving yourself some money without a massive uproot of family life. There are some towns where, one street is in Scotland, the other street is in England. Very easy geographical move. There are some people that might choose to move further abroad, Dubai and other places, anywhere really, for tax purposes. And there are some people that might, for example, own businesses, and they might choose to restructure their businesses in a way that is more tax efficient, not illegal. I really want to stress that point. I'm not suggesting that people are being untoward with their tax affairs, but there are loopholes that exist where people can legally and legitimately restructure their affairs and pay less tax. Why, you have to ask, would you not do that? And I guess that begs the question then, and that creates something called the Laffer Curve, or demonstrates something called the Laffer Curve, where you imagine we start down here, we're not charging much tax, but we're not really collecting any revenue. We go up as the rate of tax goes up and revenue collected, we get into a bit of a sweet spot, and then we start to dip down the other end. The question you have to ask, have we pushed too far the other way? And are we now getting to a point where we are charging people too much on their incomes to make it worthwhile for a higher earner to live and be economically active in Scotland and parts of the United Kingdom? Another study has shown that the number of millionaires in this country has significantly decreased over time. That was published, I think it was earlier this week. So with that in mind then, we have real world evidence that higher earners will, when pushed so far, decide to uproot and go elsewhere. And I've spoken about wealth taxes before on a number of occasions, and I'm not going to unpack the practicalities of how wealth tax works, but I'm rather just going to offer a bit of an opinion that perhaps this is a really good example of why we need to think very, very carefully about whether a wealth tax is a road that we actually want to go down. Or, if we do go down that road, are people who are economically active, earn good money, have resources at their disposal, and they are economically mobile because of the global economy that we live in, going to find a way to restructure their affairs in such a way that it is more tax efficient? Or are they going to relocate to parts of the world where they feel incentivized to be there? A rhetorical question, but I think we all know what the answer is going to be. And guys, this isn't about right or wrong. This is not about me trying to lecture about the goods of this or the wrongs of that, as some people perhaps do in the media. This is about me saying, look at what the vast majority of normal people do when you incentivize a particular behaviour. They tend to go with the incentive that policy creates, which in this case, they pay more up to a point, and then they decide, actually, I don't really think I'm getting a good deal here. And if you said to most people, look, you're going to pay really, really high levels of tax, a bit like what you're paying today. Some people would say it's not enough, but look, broadly speaking, the levels of tax that you pay in Scotland and the rest of the UK are high, comparable to other parts of the world. However, in return, we are going to give you A1 public services across the board. You know, the roads will be in good state of repair, public departments will be well funded, you can get a doctor's appointment when you want one, your kids are going to get really good education, all that stuff. People might turn around to you and say, actually, I kind of get it, and I think I'm getting a good deal, and perhaps I need to pick up that slack. But if you're delivering anything other than absolute top rates of service, you're really going to struggle to incentivize people to come and be a part of that project and that journey with you. And yes, we absolutely should help lower income and working people to get by, and I'm really commendable in some respects to what administrations have done to help people on the very lowest incomes and improve their standard of living. But from a broader economic perspective, guys, they are not going to get you to a point of prosperity. You look at all the studies, look at all the lessons of history. It's the middle class that are the real economic engines. We know, yes, that trickle-down economics is an argument that people push out there, whereby you give the money to those at the top and it works its way down through the system. And I think most sensible people can broadly accept that when you're talking about the most wealthy in society, trickle-down economics doesn't work in the way we'd like it to, because people just don't need that amount of money that they're getting. However, in the context of the middle class, that works very differently, because it's the middle classes that want to decorate their house, buy a new car, go on holiday, take their family out at the weekend, do all this other stuff that they perhaps can't afford to do unless you're going to put a little bit more money in their pockets. That's where your real economic growth comes from. Look, this is one of the world's biggest seesaws. You just know that move your dial too much one way and you're going to really hit people, because you're going to have normal, hard-working people getting crippled by high rates of tax, and you're going to stagnate the economy. And I think most people recognise that everyone has a role to play in contributing to society. However, the statistics are showing that perhaps we are not necessarily hitting the very, very wealthiest in the way that we are intending. The way that economics policies are structured is it typically ends up being middle to higher middle earners who don't have that level of economic mobility that perhaps their more wealthy counterparts do, that are really carrying the can on behalf of everybody, because the most economically mobile can up and leave. An absolute political football, and let's be frank, one that I don't think anyone is going to give total consensus on. But it's really important when you're designing your policies to think about the unintended consequences of the decisions that you make. The incentives that you create directly correlate to the outcomes that the average sensible person sees when they respond to that policy. A lot to unpack there, and one that I know we're going to revisit again, but I felt like it was really important for me to offer that explainer to people before I disappear on some summer holidays and to take a bit of a break. Over the coming weeks and months, more of this content to come. However, particularly during August, my focus is going to be a little bit more focused on the book. So we're doing a lot of work with local authorities at the moment to think about how we supplement adult learning services in particular with financial education. From my perspective, this is really vocational. There are too many people that end up rolling from personal crisis to personal crisis throughout their adult life, because maybe they're vulnerable, maybe they're not, but because they don't have the education around money that they need, they end up making one bad decision after another, which just compounds and they can't get out of it. But I've got some really exciting opportunities, like I say, with other local authorities or with a number of large local authorities over the coming weeks that I'm really looking forward to getting stuck into, and I will absolutely keep you informed on all of that. But please, follow, engage. I really enjoy the engagement that comes on X, less so the keyboard warriors, but there are some really great wholesome connections, and that's really nice to see. Stay tuned, please like and subscribe, and I look forward to catching up with you all again soon. Whatever you're doing, take care, and I look forward to seeing you when I get back.